The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman on this 23rd day of January. My pleasure to be here. And thank you to John, Steve, and to Tom for 3 great hours. I'll try to do my best here. The 11 o'clock to 12 o'clock Tiger Technicians Hour at 877-927-6648. Love to hear from you. We're going to go through a bunch of things today, and we'll discuss them in terms of the Chapman Wave methodology and a couple of things that I want you to go through. Let me just see. I've got a couple of emails. You know what? I'll get to them. They're generic questions. So let me just show you what I'm looking at here. This is what I show my subscribers to my opening call every day. And I am just, if I'm a little fuzzy here, it's just because I missed adding two positions that we wanted this morning, and I believe I missed one by, I think, 10 cents or something like that, $143 stock, and another by something very similar, an $80-something position. It's a shame. Why? Because I feel very positive about this market. You can see these charts. Let me talk about these charts. What I show my subscribers every day is invariably it's the daily and the 120 E-mini of whatever contract is coming up. In this case, it's the March S&P E-mini, trading at 2,052, down 4. And what I had shown was, let me do them one at a time because it's so important. Actually, you know what? Because this is a critical session as follow-up. Yesterday was breakout day. It's very important. I think that was quite telling in terms of the trajectory to the upside. But today is an important kind of follow-through. I said that to my subscribers that I anticipated no more than a worst-case Dow down 40, possibly a doji-type close with a fairly narrow close no matter what happens all day. The candle turns out to be like a little plus sign, and an absolute best case of a plus 40, that I thought was difficult to do. Now, let me just go through what I'm talking about. I'm showing the E-mini because it trades, let's call it almost 24 hours a day. And it shows a very large arch formation in the daily. See, all the way around there to that peak C-minus, and that C-minus is still active because the pullback that we had going to last week was 1970.25 on the 16th of January. But the low is 1961.50, the low of the 16th of January. That's the one that's so critical. So at this particular point, you could have an inside buy signal that takes you higher. Within that context, let me also talk about something that's very important, and that is within this cup formation that's now formed because the support level held very well, shows this inside wedge, this Chapman wave. Let me just talk about it in the context of my CD introducing the Chapman wave methodology. The inside wedge is formed when you get either an arch formation or a cup formation. And in the cup formation, it's obviously the exact opposite, because what it's doing is let me just do this right here. In the cup formation, it is rising, and it is inside. And that inside wedge basically is saying that there's another trajectory. And out of all the different things that you're showing, there's another trajectory that says if certain things happen, this pink, I usually make it a pink on the white background, a pink dashed line becomes an upside trajectory to where, and I'll show you how I price it out. Let's go 11. You see that green bar right there? That would be the lengthiest period of time. I like to take it from the inside wedge, and if I did that, I would probably have to go to this candle right here, this candle right here, and that would take me to exactly the 29th of January. And that turns out to work exactly towards the 28th of January time frame. That's a week from today, is it? Oh, am I going to be able to get that? I'll try. I think it's Friday. It's the 29th or 30th. I'll see in a second. Okay. The 30th is Friday. So 29th to 30th, 28th, 29th, 30th, a week from today is about where you should be testing the 18,103 level to see if you're going to make that leg D in the weekly chart. So I'm making this a little complicated. Let me just make it real simple. From the left side low bar of 17,262, the exact low was 17,243. I've got what I call an inside Chapman wave inside wedge, and that takes me towards the 18,103 level by next week, late next week, maybe early February if it stretches out. However, anytime from here on in that we close underneath this 9-period exponential moving average of 17,636 in the Dow, I have to say, you know what? I think I'm going to be wrong. It's we've taken almost the whole of January not to break down, but also not to make a new high. This sideways continuation pattern, besides being very frustrating, could in fact be telling us a story about a rotation going on in the market. So let me go back to the E-mini. So the E-mini is saying we hit that exactly today. So far, everything's on track. You could pull back, and in this case, the E-mini breaking underneath 2031, it's at 2050 right now, will be really negative. I'm not saying it can't be done. I'm just saying at this particular point, it's really projecting more towards the upside. It doesn't have to be an amazing move. It's just another 30 points, say 300 points in the Dow. So that's really not very much. We saw that you could do that in a day. But I'm suspecting it's going to take a little bit of time to do that. And here is the weekly chart, which I've begun showing to my subscribers. Not begun, for about a month now. I've been putting it into my newsletter as this whole thing of the daily, E-mini, the weekly. Why? Because I wanted to show how the channel was working, how you could possibly get an arch formation that takes you just above the 2088.75 high to go to leg C. Now, that's going to make it really complicated for me because that suggests that we would still have to wait for February, maybe the second week of February, before we could get even a D in the S&P. But I'm really going with the Dow as my prime source of information. So the Dow, so this is the 120-minute chart, and we went to a leg E just above the 2062.00 high of peak D, went to 2062.50. So you can expect that there should be a pullback here. That's just a normal thing when you get to a D or an E, and that's exactly what we've got. And we've got the channel itself, resistance. So nothing here is untoward. And let me just do this for 1 second. I want to just show you the VIX index, and then I'll run the numbers and give you all the information that you need. I just want to check right there. Okay, that's fine. Everything's cool. And I just wanted to check right there. One more, go that way. All right. So everything's working out fine for the moment. I don't have to rush through anything, but I do. What did I do? Oh, man, that was very stupid. Not very bright. Okay. So now what the VIX is doing is, even with this move down of 58 points, let me run the numbers. Dow's down 58 to 17,755. S&P is down 6 at 2,056. Comp index at this particular point is still up. It's up 1 at 47.51. The VIX is at 16.44. It's up 4 cents. That's kind of pathetic. I mean, the VIX really should be at this point in the 17.50s. If there's really going to be buying. I think there's selling. I think that all the work on the VIX is done for now, that at least for a week or so, the VIX is going to be sliding. This is my opinion. Friday at 4 o'clock, we will know on the weekly, because if the weekly doesn't, if it closes above 17, it's above the 9-period moving average yet again, and says, no, mister, you're wrong. This is just, the markets are stuck in a narrow trading range. It feels very wide, but historically, we're just stuck in a sideways move. Okay? So the next thing to look at is gold. Gold has done unbelievably well. I've got it as a B in the daily. Now, this is very interesting. Leg C in the weekly. But let me show you something that, because there was that one little tiny pullback, that extra pullback, and that sharp intraday move down on the 2nd of January, it just messed up all my charts, because This is now only peak B in the in a GLD. But in some of the stocks, because they didn't have that big move to the downside, for instance, I spoke about it yesterday. I said that as far as I'm concerned, on a shorter term basis, gold should be pulling back because the gold stocks have all hit resistance, either peak D, E, or F, or the 200 period moving average like ASA. Remember yesterday I did GG. GG made a peak E. It's pulling back from 23.99 right now. I can see it coming down to the 22.99 to 22.19 area. I had said that yesterday, if I remember correctly. Or GLD, Royal Gold, that is the royalty company. This is peak D. If it doesn't make a new high today, there again, outstanding. I love the way the golds and silvers are acting. I love the way the commodity itself is acting. I think we're going higher for the next couple of months. So, these are stocks you want to be looking at on sharp pullbacks. And that means that there's a chance that the dollar, this is so fascinating, that the dollar trading now in leg E at 94.59 made a high today, an all-time up. So that's not the one I wanted. Where did it? Oh, there it is. 120. Peak D. If I use Phantom Peak, I've got a peak D in the 120-minute dollar index. It's in leg D in the weekly. It's gone above, at least a point and a half above what I thought was pretty much the max of 93.20, because it's gone to 95.48, $2. So I'm expecting that there's a little bit of a pullback coming in the dollar and gold together. They went up together. Maybe they come down together. Hey, where does it leave the euro? Euro, now I'm going to show you something very interesting. Let me just finish with the numbers here. So we've got gold down 10 at 12.90. You've got high-grade copper at 2.57. Man, I tell you that high-grade copper, it's a real issue. You've got bonds, and this is going to be really interesting. This is the Treasury bond continuous contract. Look at that. Whoops. Look at that U-shape, double U pattern, lowercase w. This is like the dreaded H in the Chapman wave that goes from the lowercase h to a lowercase m. This is now a W. It says it should test 150.5, the high, and it's either going to go toward, right at, or just above, and then pull back. Now, talking about that particular pattern yesterday, you remember we had a caller, we had, I believe it was Richard from Tampa. We were talking about the USD CAD. He wanted to short it to 124. I said somewhere in the 124s is probably the right thing to do, because look, I've got a pattern here in the Chapman wave. Oh man, was that a break? That was a quick segment. That says we've got an F/B, and at this point the MACD and stochastic is good, but it's the 120-minute chart that should go just above the previous high towards 124 and then pull back. We'll talk about this and talk about chart patterns in a minute. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Yeah, this is very interesting. So I had a question. I'll just get to it right now. Jay and Dan said, Basil, can you look at FANG? FANG is what is FANG? Diamondback Energy. I made a peak D in the monthly. Gosh, I looked at the chart and said, absolutely, this looks like a Chapman Wave peak D. Something's wrong. Went right back and I checked out 35.91, 35.87. It's just 4 cents, but there's the difference. There's ABC, peak D top at 93.33, plunges down to 51.69. Now it's rallying. So far, the rally looks legitimate. I like it. FANG Weekly is in leg A. I think I'm calling it a counter trend bounce. I suspect it's going to fail somewhere between 73 and maybe 76 if it even gets there, and makes the H pattern and then comes back for a retest. But the weekly is good, and the stochastic and MACD and the daily suggested it will go to leg D. I'd say that at 67.74 minus 24 cents. If this got to 70.70 by about Tuesday or Wednesday of next week, I would not be surprised if 72.94 will be hit by Friday of next week. But it has to hold 65.20 to 65. It has to hold the 65s between now and Tuesday. And if it does that, it should have a very nice bounce. So that's FANG. Oh, let's see old dang. I once had that as a dang. Oh, just flattening out there. Oh, a long time ago. It was on that big move that it had. Okay, so a couple of things that, falling axe pattern as well. Good. Thank you, Peaky. So now with the S&P only down 3, let me explain what I'm looking at. There are chart patterns that I like to use. And I'm going to show you the naked chart first of all. Remember, in the Chapman wave, what we always look for is at least a D. And in this particular instance, the low that was made in the USD CAD currency pair from the low of at 1840, that's 640 on the 22nd of, that was yesterday, it went to peak A, B, C, pulls back, and then it goes to a D. Pulls back again from the D and starts a brand new ABCD, and that ABCD takes it to 1.245. Now that 1.245 is a tad high, just a little, but it's within the context of what I was looking at in the 120-minute chart, USD CAD currency pair, where I said that it could, this rectangle pattern says it should have an inside bar that can take you to a D or an E, and in this case even an F, and then you've got to be careful. So right here at the G/C in the 120-minute chart, you've got to watch this closely, because if it closes anywhere at 1.242, there's a good chance it's going to retest and make a 1 penny or at least a fraction higher to make that D above 1.24558. Now, it doesn't have to do that. This is the area that you can start looking at as a potential short, but because it's been so powerful, remember I said the strength of the buying is there, the desire to own it is there. So you've got to treat it as the direction will only be confirmed when, in fact, it starts to take out important levels. And in this case, it really needs to take out the 1.228, 1.227 area so they can test 1.215, the 9-period exponential moving average. Until that happens, this is really an uptrend, and it's going to be that way. And if the market continues high, which is my anticipation, then we should be looking at the fact that the dollar and gold and the market have been going together says that if there is a pullback in the dollar and gold, that means you got to watch out with the market, because maybe the market will pull back. I'm not sure they're going to diverge at this particular point. And the euro, that was hysterical selling going into the low, but I didn't get a volume spike. I wouldn't get a volume spike because in this case I don't have it. So let me look at FXE. Okay, I had a volume spike yesterday. The day is young, so I don't know if there's going to be a volume. If there is a tremendous volume spike, we will have some kind of a climactic volume low. It says you could have 28 bars of upside move before you retest the low of today. I don't know. I'm just saying that's what I'd be looking for. So I'm wondering whether or not we're looking at some kind of, you remember I called it an internal low and then a residual low. So the internal low could be coming in the next, from here or within a day or so. That would mean that the dollar is about to have a pullback. Will the dollar have a pullback as the market goes higher? Is that possible? I'm looking at the rotation through different sectors, and it says it's possible. I'm going to have a look at USX right now, and I'm going to discuss some of the things in the heavy cyclicals that's very important. I'll be right back. Basil Chapman, Tiger Technicians Hour. S&P's now down only 2. Dow's down 34.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I was asked about USX. X is a symbol at 21.25, down $1.47. I looked at this and I thought, you know, it's very interesting. It's starting to, it looks like copper, it looks like crude oil, it looks like natural gas. And then I thought, you know what? I don't know if I want to mess around with it. I took a different cyclical, and we took a tiny loss on it. I just didn't want to mess with it. It either was going to work or it wasn't going to work. And one of the reasons is that if U.S. Steel, and let's say something like, let's talk about maybe AKS, AK Steel, you know, they should be working right now. They aren't showing that kind of the strength. So I'm just going to say, you know what? I don't see it yet. I don't think you're missing out on much because on a percentage basis, yes, if it bounces from 21.20 to 23.20, and then I suddenly say, hey, I like it, you've given up 2 points, 10%. But I don't want to give up. Look at the move today from the high of yesterday, 22.91, to the low today of 21.14. You know, that's 7-8%. I don't like to do that. I'm not interested in that kind of thing. So I'm going to say I don't see it yet. In U.S. Steel, it was one of my favorites a long time ago, but we've been out of it for quite a while. So I'm going to say, at least for now, I'll keep looking, but I'm not going to do anything about it right at this moment. Let's go to, is that Manny or Marty in Worcester?
Yes, sir. Good morning.
Is it Manny?
Marty.
Ah, Marty, it's a T. Okay, that's what I've got. So how are you, Marty? I haven't heard from you for a little while.
Well, no, sir. I am being, kind of conservative and very picking and choosing and trying to get into things for intermediate term at least. So I'm not doing a lot of quick trading at all.
That's fine. This market requires one to be very disciplined. Yes.
Yes, sir. Well, my question is, I do have a partial position in NGD, New Gold, and I was wondering if this would be the time to add a little more.
You know, this is one I looked at just recently. I don't remember why I didn't notate it. I think it's because I was just running through different gold stocks, the ones that I don't follow on a regular basis, and this was one of them. But one of the reasons is I saw NG. Sometimes I remember symbols exactly, and sometimes I remember the symbols, but I can't remember what it is. And I thought, oh, is that natural gas something? Then I saw it was a gold stock. One of the reasons why this one's bothered me is that the monthly chart, it just refuses to try to close above 484 in the monthly chart. And for this stock, it should have been easy because it's been up already at 512 back in the week of the 9th of January. And NGD trading at 440 is down 11 cents today, down 2.44%. Now, if I was looking at this on a more intermediate term basis, I would say to you that the pattern that I'm looking at here looks closer to me like it's making new recovery highs. And yes, on a weekly basis, you could say it's making higher lows. But boy, the way it's acting, it really looks like it wants to test the 425, 415-ish area before it's able to really make up its mind. Now, out of the different gold stocks, is there a fundamental reason why you like this, or is it a technical reason? Why do you like this better than some of the others?
Well, one of the reasons I like it is it's a very low-cost producer, and gold was cheap in it. But, I suppose also, and it's a stupid reason, is that it's not too expensive, so that you could get a lot of shares and take advantage of that.
You see, that kind of thinking is exactly right on a price level. But there are stocks that might be at $570, and if you do the homework, it turns out that they are cheap. So you're talking about cheap in the price sense, but it might not be cheap in the fundamental area. In other words, if you did the bookkeeping and you did the reality of what their costs are, et cetera, you might find that ABCD did that to the monthly chart, that the reason why it hasn't really, you can't say it hasn't had a move. It's gone from the $3.37 level to the 512. That's what is that, 68, 70, 73% or something like that. That's a tremendous move, but it was a stock that was trading at $12 to $14. So here's my thinking. I know that you like to position yourself. You have patience. You don't actually mind some degradation in price as long as intermediate term you're going to more than make up for that because of your patience. So I'm going to suggest that the chart, if you're talking purely chart formation, if today at 4 o'clock on a weekly basis it closes under 445, then next week I'd be very careful, because if it starts to slide below 425, 420, there's a good chance it's going to take us time and go down towards the low fours. So that's 10, 12% from here to the downside. That's really not the big bother. The bother for me is that these technicals in the daily chart are not acting all that well. The best part about it is that on a weekly basis, the technicals are acting very much better. So I'm in your camp looking at this more as an intermediate term, but it has to prove the point. So here's my recommendation. You've already got some. The big question is, are you going to add to it? Is that correct?
Yes, sir. That was my question.
Okay. So I'm going to suggest, because you've got the patience, why not hold off a little bit? If you want and you have a chance, if you can call me maybe next Wednesday or so, give it a couple of days. But I'm watching it real closely, because if it finds support in the, I've made a rectangle formation between the high of 512 the last week, 2 weeks ago, and 378. That's the larger rectangle. But basically, it should stop somewhere around 420 to 415 if it's going to pull back. And by a week from this Friday, exactly this time next week, it should be traveling in the 450s. If it does that, I would recommend to you that it is looking more like that intermediate term add position. Or if by next Wednesday, Thursday, it's holding and it's bounced, it's come down to the 420s, and now it's bounced and it's even at 435 or somewhere where it is right now, and gold itself has had more of a correction, I would say now that's good action. But at this particular point, because I have peak D, E, and F in so many gold stocks, I think there's going to be a bit of a pullback. And this one looks like it's pulling back. So I don't feel comfortable on the weekly and the monthly right at this particular time to say, add to the position at this price of 440. I'd feel much more comfortable if it did a little bit more testing, and I found that it really had a base, and it never went underneath the candle of the 15th of January, 419. If it's holding nicely by midweek next week, I think maybe that's the time to add to it. And you know what? I don't think you lose anything, because I can see that even if it pops up to 471, you'd be able to get back in at about 451, 450, 451, 445 at some point over the next 2 weeks. So if you don't mind, this is just my situation here, is that looking at the chart, I think it needs more of a consolidation, and I don't feel comfortable saying add to it. I think you are going to be correct if over a week and a half to 2 weeks, it shows it's really building a nice base. And if it does that, that weekly is going to improve, and that'll help the monthly. So I hope that helps you, Marty.
Yes, it does. Yes, it does. I'm not going to be impulsive. I'm going to, I got lucky just the very last time when it crashed down to 378. I grabbed some at 397, and it's good to hear what you're saying. I'll wait a while yet and get it a little cheaper.
And you know what?
Unless it doesn't hold, in which case I've got to bail.
Right. You see, so that's the issue, that at this particular point, you've got a comfortability factor. I want you to still have that comfortability factor, even if it digests the gains. I don't want to get back to where you got in. Thanks for calling, Marty, and have a great weekend.
Thank you.
Thank you for calling.
Yes, sir.
So, folks, this is an interesting thing, because you remember I was just talking about stocks like GG's. It's done so well. Doing a little consolidating here. Excuse me. If it's going to pull back from the 23.95 area about a point or even 2 points after such a spectacular move, going from the lows of 17 to 25, I mean, that's a double. You've got to expect some kind of a pullback. So if a good stock, a good acting stock, pulls back like that, then a lower priced one. I wonder what AU is doing. I think that was low priced. No, it's now not so low priced anymore. Yeah, peak E and it's pulling back. I just have too many of these gold stocks pulling back. We are long in my opening call. We're along one of the ETFs. So, and it's still acting very well. That's fine with me. There you are. There's AU at 416. It's doing the same thing as Marty's stock. All right, let's go to Brent Martinez. Brent, how are you?
Doing good, Mr. Chapman. How are you?
I'm well. You would like to look at?
I'm calling about Loco. I was just going to give you a quick little bit of history if I could.
Yes, please.
Go to your
Let me just tell the folks, this is El Polo Holdings, Inc. I believe this is a restaurant, right?
Yeah, El Pollo Loco.
Okay.
Yeah, Crazy Chicken.
Crazy Chicken, that's right, yes.
Yeah. I'm a building inspector in a local jurisdiction here in the Bay Area, and it was probably about 5 years ago. There was a project that came up in my area, and it was one of these restaurants, which I had never heard of at the time. And so I was able to get pretty involved with it as far as just the way they were set up, the kitchen layout, just the customer area, the whole thing as far as the way the restaurant was set up. Went through the whole process, finalized the thing, and then they had the grand opening. And then I've been watching it. I drive by it almost every day, so I could see what kind of traffic they generating. And they had pretty brisk amount of customers. And then I fast forwarding, to about roughly about a year ago when they were going to have the IPO. It got my attention, and I didn't do anything at the time because I don't like chasing stocks, and it ran up to that 41, and I've just been patiently waiting for the thing to back down and come back to where it, had its IPO, and I put in an alert. Anything $20 or below, I would get triggered, and it did that. And
oh my, did it do that? It went to $19.85, 15 cents lower.
Yeah, so I was able to get it just below 20, and then obviously had this run, and it looks like it could potentially go up to, if you do an AB equals CD, I know you don't necessarily do that, but it looked like maybe
well, actually, no. You remember I do. I've got a technique. I got a technique that I call the Chapman wave 1-to-1 extension. Let me show it to you. It's right here, and I'm going to do this new parallel, and I put it in there. That is a Chapman wave 1-to-1 extension, and what it says is the same time at the same price that you've gone up or down. If there's a little sideways move and it looks like an A to B equals C to D, then you can have a 1-to-1 extension, and it should take you the same amount of time. This took 1, 2, 3, 4 bars to go from 1985 to 25. So that's 6 points. And now we've got a low of 22.51, and that should take you to 28.51, and we've gone to 26.68, and that should come in either today or on Monday. So that's the 1-to-1 Chapman wave extension.
Okay, that's about what I was figuring. Yeah, around 29 potentially. So that sounds about like what you have.
But let me just speak to this issue, because you've brought up something that I love this. There's a rotation going on, and one of the aspects that I'm going to be looking at, let me just show something. Oh, first of all, I love the action. I love the fact that it coincides with the price of oil coming down, so that you've got more people driving towards these restaurants. I love the fact that it was an IPO that came out back in, as you said, was an IPO. So this was back in July of last year. Opens at round number 19, drops to 18.48. Spirals to 39.94. The next month it goes to 41.70, and then that technique that I call the single leg A phenomenon, it breaks down and comes back almost to the low of 18.48. It went down to 19.85, a point higher. Now, what's really important about this is that means that you're really restarting the monthly. I'm going to be watching a stock that I've got on right at this very moment called Box, and it was an IPO this morning, came out at 20.20, went to 24.73, down to 2016, and now it's got a Chapman wave A, peak B, peak C, and is that a C there? Yeah, C, and it actually made a D, I believe, right there, and it's pulling back. So these things, doesn't matter whether it's a 2-minute chart or whether it's a monthly chart. From IPOs, they very often do a certain characteristic.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hey, June, great show with Nico and Paige on your health. Had an email and it all coincides with exactly what I was talking about. So what I'm looking at, Brent, is that there's been a rotation going on. And how that rotation unfolds and how the biotech IBBs consolidate when they finally start to consolidate, I think in February, and how some of these, not all, but some of the smaller lagging restaurant chains start to do better as they play a kind of a catch-up, is going to be very important, because if we have this kind of rolling consolidation through February, we might not have to have a 12 or 15% correction before we start another big move to the upside. And your stock is one of those that I'm looking at. So, and now I just got an email about Clarke, which is KLA 10 core, which has been on fire. Just a fantastic stock, going from 2012 lows around about 20 to the most recent high of 73.12. I'm getting a possible peak F in the, it isn't confirmed yet in the monthly, but a peak F in the weekly, and an H pattern that looks like it's going to fail in the daily. So I'm getting a rotation through some sectors that were fantastic, and now there are others that are going to possibly take the lead. So I like what you've got here. I think that your patience and your assessment is correct, and so far the weekly is good price-wise. The technicals need a little time to repair, but the daily is 84% in the stochastic, and the MACD is good. I like the stock, and I'd probably say that it should pull back maybe to the 25.50 level, 25.20, and then start leg C. But it depends on how it can pop or not on Monday to get close to the 27.28 level. Nice, good eye, congratulations. So that I just wanted to go through that for Brent and Martinez, just to conclude, because we got cut off because I missed the timing there. That's not very good for a musician to miss. Oh, you're there. Good. Yeah. Thank you, Brent, and thanks for bringing it to my attention. I'm writing it down because it is one that's acting very well in these circumstances, and that's always good to know. Thanks for calling.
All
Have
right.
a great
Take care,
weekend.
Basil.
So what I want you to do, folks, is first of all, I wanted to say to Matt, our friend from the Den from quite a number of years ago, used to live in the Boston area and got married and went down to California to work for a computer company. And then he switched and he went to work for a company that went public today, Box Inc. And I have no idea. I'm not sure exactly of his position or anything there. I know that he was enjoying it, but most importantly, I love the fact that he's worked real hard, and it's a growing company, and I wish him the best of luck, and I wish Box the best of luck, because we'll see what happens to it. It's an IPO, and just to go out and buy an IPO right like this is kind of tough to do. So now, excuse me, as we're about to leave my show to go to Nico and Paige, let me just explain what I'm looking at here. There are stocks, for instance, we just missed adding, well, some of my subscribers have the stock because they held on. I had a very tight stop, and we got stopped down for very tiny loss 2 or 3 times, 1% or 0.7% or something. And today I tried again. I missed it 3 days in a row. We've been missing it by pennies. This morning I said to buy it for those who haven't got it at 143. What did I say? This is Athena Healthcare. And it's the pattern. You see, there's the pattern I was just talking about, that cup formation. So I said to buy it at, let's try to buy it at 153.55. What was the low today? 153. Did I say 143.55? The low today was 143.80. Missed it, unfortunately. So, and here it is, leg B, and it's on its way with that inside wedge pushing towards the 153s. So that's the way we do it, and that's my Tiger Technicians Hours done. But if you want to check out my work, go to the opening call, test it out for 2 weeks free, had some nice trades, and I'll be back on Monday. Have a great weekend, everybody. Stay tuned to TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.